You're watching Beyond Markets. Welcome, I'm Esther, Awoniyi. Many thanks for joining us today. On today's show, we'll discuss Nigeria's renewed drive for financial inclusion. As always, you can join the conversation with the hashtag Beyond Markets, and you can also send tweets and follow my Twitter handle. It's at Esther or Awoniyi. Now, the Central Bank of Nigeria says it plans to broaden access to financial services to people in underserved parts of the country over the next 5 years, and its ultimate goal is to ensure that 95% of eligible Nigerians have access to financial services by the year 2024. Professor Olayinka David West, Academic Director and Professor of Information Systems at the Lagos Business School, and Dayo Ademola, Head of Innovation at Efina, join me today for the discussion. Ladies, thank you so much for being here today. It's a pleasure to have you on the show.
Thank you for having us.
Financial inclusion is an ongoing conversation. It's one thing, thankfully, that Nigeria has taken very seriously, and we're seeing major steps towards ensuring that we have more people, having access to financial services. This has been, I suppose, more of the action, as it were, is being spearheaded by the Central Bank of Nigeria, as we've seen so far. And just at the Apex, at the Central Bank Governor's press conference, where he talked about his strategy for the next 5 years, he mentioned financial inclusion, and now we're hearing that he's targeting 95%, having 95% of all eligible Nigerian adults have access to financial services. Dayo, let me start with you. What is your perspective when you heard him say that, and then keeping in mind the existing strategy that we already have for the year 2020?
So it's a very interesting and ambitious goal that the governor of the central bank has set for us. As of the end of 2018, we had 63.2% financially served Nigerians. Now that's a combination of 48.6% financially formally included and 14.6% informally included. So if we look at those numbers, and even trying to reach the 80% goal that we've set for 2020 is very ambitious. So 95% by 2025 is also extremely ambitious for us to reach those targets. So what we're very interested in seeing is the actual tools and mechanisms that are put in place to try to make this happen. There's quite a few tools that are just about to come on board, everything from the PSBs, those are the payment service banks and that entire infrastructure. We have SANEF, which is the shared agent network, also coming on board this year. So it's interesting times ahead.
Absolutely, and it would appear that, Professor, there appear to be a number of moving parts here, but they sort of look coordinated. But let me hear your perspective also on the central bank's new additional strategy, as it were.
Okay, generally, I think that if we look at financial inclusion in itself, it's really about access to and use of affordable financial services. So when we break it down, the first point is, how do we give people access to financial services? How do we onboard them? And that's really the core platform of getting them on accounts. Then the next stage is, how do we get them to use these accounts to transact, right? So they have to sort of receive money digitally to ensure that they can also pay digitally, because digital payments are a factor of ensuring that you can continue to transact digitally. Then the third factor is affordability. How do we ensure that these are affordable? And when we think about the three areas, and these are critical success factors, the first one is about distribution. How do we ensure that we can distribute these financial services to consumers at the edge of the market? Because you don't want consumers having to travel into the cities, because that transportation time also have costs. Then the next thing is about identity and access and signing up. Because sometimes, don't forget that because you don't have identity, we're identity poor relatively, you can't even sign up to any formal service in any sense or the other. So how do we ensure that they have the identity? And hence also, in the CBN governor's statement, there's also a push to register and enroll more people into the bank verification numbering system. Then the third stage is, how do we make it affordable? Because we can't continue to use traditional brick and mortar structures to ensure that we can reach at affordable costs. And that's where the digital comes in. And then so we need to drive the digital platforms. And hence also, within that statement, he also speaks extensively about improving and enhancing the payment systems infrastructure that we have in the country. So if we can get all these three moving parts working synchronously, right, and synchronize them, then we realize that when we go back to the financial inclusion strategy, then the 5 pillars and the 5 priority areas we can continue addressing and targeting and eating into the numbers.
Absolutely. You've made some very good points there, Dayo. I mean, technology obviously is key here, which Professor just talked about, improving the financial system, the structure, the infrastructure as it were. We know fintechs are playing a big role in this regard, although we do have, and we'll talk about that later, those on the ground, the agent network, that's also a key. But in terms of how we're deploying this technology, how fintechs are also contributing and how they're working in tandem with the banks to achieve this.
So the main thing that, the main advantage that a fintech brings, as the professor just mentioned, is working without the traditional expensive brick and mortar distribution infrastructure that banks typically use. And whatever back end it is that is supporting their technology in creating formal financial services for the currently excluded or the underserved, then that just helps bring those services even further afield. And looking at just being able to access all of these services on your mobile phone, even if it's not a smartphone, it's a feature phone, being able to use the USSD infrastructure to be able to transact. One of the things that we need to remember when we're talking about financial inclusion is to remember the fact that today, even given the challenging economic lives of most Nigerians, even when they are financially excluded, those transactions are still happening. And they're happening informally. They're happening on a cash-based system. They're happening on people putting money on transportation to send money to another location. So what it means, what financial inclusion does, is to formalize those financial ecosystems that already exist. Now, the working theory is that if you do that, you help bring prosperity as well. Because when people, especially if they have access to credit, and the fact that they're financially included now also means that they have identities that can be verified. So all of those things mean they're able to grow their livelihoods, they're able to grow their businesses. So that's the hope, and that's the working theory we have when we're working with financial inclusion. So fintechs have a very big role to play in that. Okay,
now Professor, obviously with all this that's going on, with all the parts involved, monitoring, tracking is extremely important. That lets us know what we're achieving, where we are, and where we could be going. In terms of monitoring and tracking, let's talk about what we've achieved so far. From either affordability, either access, and actual usage of these financial services. What can you tell us? What do we have on ground?
Okay, right now, monitoring is one of the biggest tasks that the CBN has to embark on. And one of the areas of monitoring is really about the price regulation. Sometimes you find out that the CBN does have a guideline of tariffs and charges for the financial ecosystem. However, you find the agent who is serving the customer might also have to add on his own costs to the fees that he's going to charge. So for example, when an agent also needs to be sustainable. And in some locations, sustainability is a bit harder than in urban locations. So when you think about an agent who is serving a rural community, he also has what we call high costs of getting cash, because he has to go to the bank or find some other way of getting cash to be able to serve his customers on a cash-in, cash-out basis. So if that agent, for example, and it's a two-legged system, if that agent is not receiving enough transactions, like let's say sales, if he's doing some other business that brings in cash, then he has no cash to pay out when people want to sort of have cash out services. So you realize that the agent now has to leave his store, go to a bank to collect cash to fill his own wallet to be able to serve his customers. All those things have a cost. Another challenge for agents is power and energy. They spend a significant amount of money keeping their stores running, because when we talk about digital, right? Digital means you must have power. Absolutely. And you must have telecoms, okay? So by the time we add all these things in, you realize that the agent is spending, because we did some studies and work in terms of what is the sustainability and the economic viability of agents. When the agent is spending about 25% of his OPEX on energy costs, right? That's a significant amount. So and then that's also going to take out of his operating working capital that he can use for the business. So he's always struggling and balancing these things again. Then on the side of, so monitoring is key, and the central bank is really trying to ensure that we can be fair to all Nigerians. they don't want exploitative charges, because sometimes when people feel, oh, I can charge you 10%, then and people are willing to pay because the thought of having to go to a bank or there's no bank nearby, the cost of going to a bank is even more than the 10%, but that's not right in any sense or the other. So we need to balance the thing. So they do have, they have set up within the Financial Inclusion Secretariat, they have set up a unit that's monitoring and registering agents to ensure that we can pinpoint where these agents are and also ensure that we can track the level of activity and level of business. Because if an agent is not doing any business, he's likely to close down. And then that's also going to impact the trust within that ecosystem, saying that, oh, this thing is not good or it's not sustainable, so let me continue using my cash. So it's about onboarding and then the long-term sustainability and economic viability of everybody in the ecosystem.
That's very interesting, because we do not, many times do not hear the back end, you know, like you just, I think I'm hearing this for the first time, the cost of the agent himself and how it could, you know, have that ripple effect on the entire operation. Just to lend your voice to that too, how this could be, it's obviously a challenge, but is it a big enough challenge to throw things off course?
I mean, we hope not. We hope not. It would be extremely pessimistic.
Because I mean, there's a big there's a huge number of agents that are on ground that we hear are going to become operational. And if this is some of the issues that they encounter, I'm just wondering, could that be a big issue?
Well, some of these costs could possibly be subsidized by some of these programs that we're looking at that are particularly interested in financial inclusion.
Okay.
You know, but otherwise, we have to find a way to make it work. You know, everything from, if we're looking to, and we have the highest levels of the Nigerian government saying this is a huge priority for us, and setting these sorts of ambitious targets, we have no choice but to make it work.
Okay, political will be key in this.
Exactly.
All right, we're going to just take a short break at this point and come back pick up from where we left off. Thank you for your time so far, ladies. I've been speaking to Professor Olayinka David West, Academic Director and Professor of Information Systems at the Lagos Business School, and Dayo Ademola, she's the Head of Innovation at Efina, looking at Nigeria's financial inclusion drive. We'll be right. If you're just joining us, Professor Olayinka David West, Academic Director and Professor of Information Systems at the Lagos Business School, and Dayo Ademola, Head of Innovation at Efina, are with me today, and we're discussing Nigeria's renewed drive for financial inclusion. Thank you, ladies, for your time so far. Let's move this along. Part of the existing strategies to have telcos, as we mentioned earlier, telcos, and now supermarkets and retailers to also, you know, be part of, help expand and deepen financial inclusion. Dayo, let me start with you. To what extent, I mean, in terms of the impact this could have, if we have this fully up and running, how further can this take us on the financial inclusion drive journey?
I think the impact could be tremendous. With these telcos and supermarkets, and some are saying FMCGs, the entire PSB infrastructure is leveraging on existing infrastructure that these businesses have already been using to reach customers in remote locations. So yes, there's going to be a Chinese wall, obviously, between their registered financial services and whatever the current business the company is doing. But it does have the potential to drive impact as far as financial inclusion is concerned. The central bank governor did talk about, as you mentioned earlier, enhancing payments as being a huge priority. It was one of 5 priorities mentioned for his current tenure. So I think that, you know, the PSBs could have a really large impact on that. And we hope the fact that this was brought to bear by the governor of the central bank, that also means that the approvals of the licenses will be sped up as well. Okay,
Professor, I want to hear your thoughts on this particular, because earlier I mentioned that we were talking earlier off camera how access is just one part of the equation. At the end of the day, how much usage are we seeing? And at the end of the day, what is for those who have very low disposable income or don't even have jobs or have a source of income, what is the appeal of being part of a financial system that, I'm just wondering, what is the appeal? I mean, how are we dealing with that?
Well, there are several ways we're dealing with that, and I think this is where the government's national social investment programs come in. And the whole idea of the social investment programs, especially the conditional cash transfer, is really to give 5,000 naira to the extremely poor. And so that means we have a social register and they're dispersing 5,000 naira, because with that 5,000 naira, they can actually start some level of economic activity. Don't forget that without any economic activity, you have no business with finance on money. So how do we get people even if it's just petty trading. At least it's moving the circle around, and then there's that economic activity. So those programs are very important. Then the another thing that we also identified is the fact that if you can give these monies digitally, they're more likely to stay digital and to transact digitally as well, so to bring their costs down. But when we have to give it in cash because there's a distribution constraint, right, then that means we're also not working towards promoting a cashless society. So when you look at the PSBs and the licensing, it's really about how do we expand the distribution network? Because don't forget that expanding the distribution network also expands awareness. There's some people in Nigeria today who don't know what mobile money is or what digital financial services are all about. Yes, they do have telephones, but sometimes they don't even know. So how do we even boost awareness when it is through these community relationships that they already have that you can foster awareness? And so the agent is not just a service point, but he's also a marketing point as well. He's also a training and an onboarding point as well, because a lot of the time we realize that some people start off using the agents as their intermediary, and then they evolve into a self-service mechanism where they've learned how to use it because the agent has guided them through. Because don't forget that they don't exactly have smartphones, so they can go onto YouTube and watch a video as to how to use USSD, etc., etc. Then this also brings in the aspect of financial literacy. And financial literacy is also key because we need to also ensure that people understand what they're buying into, because sometimes it's lack of understanding of terms and conditions that makes you actually stop using financial services. So while we might tick a box that says, oh yes, you have a bank account, but are you actually transacting with that bank account, or are you just keeping the money as a repository, and then on payday you go and withdraw everything and then you convert
But are we
cash?
monitoring that? Do we know, in terms of volumes, do we have any data on that?
Yes, what we've done, there's a company we work with, Insights to Impact. What they've done is that they've actually looked at transaction data.
Okay.
And they're looking at transaction data from NIBS, although that's still limited because it's really about the interbank transactions. And they're monitoring that to say, okay, what are the trends and patterns when money comes in digitally? What happens to it? How do they use it? How do they cash out? And it gives a lot of insights to find out that if you don't start digital and keep as many people on the digital ecosystem, then money can remain digital. But when people have to cash out, it's because they don't have access to digital payments from the merchant's perspective. So it's about also growing the merchant pool. And when I say merchants, I don't just mean store retail merchants. I mean schools, so I can pay school fees. I mean petrol stations. I mean hospitals. So that the merchant pool has to grow to ensure that, see, when I go to a hospital, I don't have to collect cash. I can pay digitally. Okay. When I'm paying school fees and things like that.
Dayo, I mean, Efina's done. You want to add something?
So yeah, just to add a point, and to buttress, her last point. It's very important for acceptability to grow. So digital payments only work if I want to pay you and you accept my form of payment. Be you an individual, be you an institution, be you a school, whatever the case may be. So if I can go around paying people out of this digital wallet, whatever that wallet may be, then the less cash the entire ecosystem uses and the more people will utilize. So that's one of the things that the PSB network should be able to grow.
So I'm just thinking, in a rural setting, and maybe, rural farmers or petty traders are introduced to that payment system, and then they want to spread it across their friends, customers, family, but those ones in return do not already have or not using that. I'm just thinking, is that a factor that could discourage some people from continuing to use it when they know that, this is not across the board yet. Right. How do I send to my sister? She hasn't heard of it, and I don't know how to begin to explain the usage to her.
Well, if you think about the fact that with mobile phones, for example, some people in their families were the first ones to get mobile phones, and their family of 20 people, there's only one mobile phone there. But that has grown over the last almost 20 years that we've been on this GSM journey. So if you introduce it to one person, and again, accessibility is extremely important. As Professor said, growing the merchant network, growing the agent network with the use of, the PSB infrastructure means that more people have access to it. So if I say as a family benefactor that I want to send you money, but this is how I'm going to send you money, but just go down the road and you're able to open your own PSB account, then this is how it grows. And if I know that with every transaction that I need to do in every aspect of my life, this is an accepted form of payment, It's like, imagine, you know, for us in the urban areas, the proliferation of POS machines, and how irritated you get every time you go somewhere and they say the POS isn't working, there's no POS machine. Because when you left your house this morning, all you had was your debit card. Sure that for whatever transaction that you needed to do for the day, here in our bubble in Lagos, you're going to be able to do it. So that's how that sort of, and if as a business or as a merchant, I realize that 90% of my customers walk in and ask, do you have a POS? Then at some point I'm going to go ask my bankers, I need a POS, because this is how my customers transact. So it's that sort of growth and that sort of user acceptability that we're hoping to see with the PSB framework.
Interesting. Professor, let me ask you this. I mean, we've been on this since 2012 when we first had that strategy. That's what, 7 years now? And at the heart of this also, another big story, part of this story is improving the financial or the economic well-being or, you know, situation of Nigerians. Is that happening? Are we also tracking how better or well-off Nigerians, those who are now using it are, who now have access, how well-off they are now since using or since being part of, you know, financial inclusion?
I think tracking is something somewhat more difficult because we're a large country. But I think in terms of improving economic well-being, one of the things that we have found is that access to credit unbundles a lot of things, right? When people have access to credit, there's a ripple effect because you can save, you can put money in the savings and then you can lend more money. So when you can lend money to MSMEs, and don't forget that the last SMEDAN and NBS study that was done reported about 37 million MSMEs, right? When you can lend to them, then they can also increase and ramp up their economic activity. They can employ more people, they can grow their businesses. And those things have a continuous domino effect across the economic cycles. And then when you think about how do we ensure that we can increase access to credit, it's also about savings. How many of us save? But you can only save when you have excesses as well. So the whole idea is how do we ensure that we can reduce the transaction cost and the cost to serve to give people more ability, increase their ability to transact more, and then increase their ability to save more. And these savings also can be small amounts, and this is where the informal sector, in terms of the Esusu and the Ajo works, the cooperatives. Because if I can save 50 naira a day and do that consistently, right, and I have a means of being able to pay that 50 naira a day to somebody to collect, you realize that I'm more diligent in doing it. And that's why when you see the Esusu or the cooperative guy, he goes door to door. Because a lot of these are women typically, and a lot of these women are what we call time poor. Because they don't have time to close their market stalls, go to the bank, queue at the bank, and do things. So they use what is accessible and convenient for them. But if you have agents spread across these locations that are registered with formal financial providers, then you realize that, oh, we can actually pull in more.
Dayo, on the issue of gender, women also are a key component of the success of financial inclusion, but the numbers are not so great. Are they improving? I know Efina does a lot of work and research in that regard too. Are the numbers climbing?
The numbers, the percentages, the numbers climb, but the actual percentages have remained pretty steady over our last two studies. So of the 33.6 million Nigerians as of the end of 2018 that were financially excluded, more than 55% of them are women. So there's a disproportionate amount of women excluded versus men. But the raw numbers, obviously, with our population growth, are growing, but the proportions remain relatively low. So just to talk about, to buttress the points that the professor made before about sort of the economic activity that happens in the informal sector, what we're also trying to do is to try to get financial technology, so Fintechs, to come and digitalize those structures that already exist. So you have quite a few Fintechs now that are running sort of like a Susu plan. So it's that, instead of having someone come around to collect this money from you, you sort of digitalize that cooperative, you digitalize that payment structure, then you're also able to lend in a more structured fashion. Those cooperatives are more able to lend in a more structured fashion, and that is expected to also help drive economic growth, like the professor mentioned. So those are some of the things that we're looking at, and we're hoping by the time we do the next Access to Finance survey in 2020 and the next one in 2022, we should see some more impact in the reduction of those numbers.
Absolutely. I mean, impact on the ground is key. Professor, last point before we wrap this up, back to the CBN's target, 95% by the year 2025. before. With all that we're achieving right now, with all that's working right now, are you optimistic? Do you see us achieving this goal?
We can achieve it, but I think we have to push harder. You know, there's certain things that we must do, and we must do consistently and consistently well. We have to get the SANEF network working. We have to get the agents sustainable. We have to have the PSB licenses awarded, because even when these licenses are awarded, it's going to take some time for them to sort of start up in general and go to market. We have to, I like the fact that even when you look at the financial services, on the spectrum of financial services, there's also micro pensions and micro insurance coming on board as well. We need to grow those things. We need to ensure that we can aggregate the services, because the whole idea of financial inclusion and mobile money or any digital financial services is that the value increases when the network size is larger. So we need to grow that pool, deepen that pool, have more people doing more things. On the provider side, we need to innovate more as well, and build more products and services.
We're going to have to leave it there. Thank you so much for talking to us today. It's been a pleasure having you too. Yes. I've been speaking to Professor Olayinka David West, Academic Director and Professor of Information Systems at the Lagos Business School, and Dayo Ademola, she's the Head of Innovation at Efina. Well, that's it on Beyond Markets. Thank you so much for being a part of it. Remember that you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of the show on our website. That's cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets, and you can follow my Twitter handle too at Esther or Awoniyi. From myself and the team, it's bye for now.